Welcome back to this beautiful YouTube channel. How are you guys doing? I hope it's been a wonderful day. And if you're watching this video in the night, like I am preparing it in the night, I want to believe that you've been having a really good night. And if not, I hope that you're going to be having a better night. All right. So I'm hoping that this class is going to be the last class on national income accounting, but then something else might come up in the future. However, for now, this is going to be the bus stop. All right. So, national income on its own is referring to the sum of all incomes generated from different parts and sectors and productive and current productive activities in an economy in a particular year, right? But then personal income is just talking about the parts of national income that accrues to individuals and households. There are four economic agents, right? So you have individuals and households as one. You have governments, you have firms, and then you have rest of the world. But then for personal income accounting, we are looking at how much of this is actually going to households, which of national income is going to households. So there's a formula for it, and the formula is personal income equals to national income, right? And plus income received but not earned by households. Those are actually transfer payments, those things that you don't add when you're calculating your national income because they were not meant for currently produced goods and services. But then households receive them anyway, so it's part of their own income. Then you subtract income earned but not received from that calculation. So what are examples of incomes that households earn but they do not receive? One of it is their social security contributions. It must made by both the employers and the employees. So it's part of the income that should go to individual workers, right? Now, it doesn't go to them while they're still working, it goes into their pension fund, for example, and then they don't get it until after they finish working. So it is an income earned, but you are not getting it, right? Then that's number one. Then number two, we also look at corporate profits. Now, corporate profit, you have individuals and households, in your circular flow of income, yeah, you have households being the one that provide factors of production to businesses. Businesses produce goods and services. They pay households for the factors of production that they're buying from them, and then also pay them back for the goods and services that they buy from the businesses, right? So for corporate profit, individuals are still the ones that are supplying the raw materials and whatever that businesses are using, like it's coming from households, like assumption. So in this particular case, when you're looking at corporate profit, it's not everything that goes back to households. The only one that goes back to them is their dividend, right? So the remaining part, retained earnings, is actually part of the income earned by households, right, from their investments in businesses that they are not getting, right, because the businesses are retaining them, are withholding them for expansion or for anything, right? That's one. Then corporate profit taxes are also paid from corporate profits. So those are part of income earned by households that are not coming, to households. So is there anything else that I have not mentioned? The social security contributions, right? I think I already mentioned that now. I already mentioned that. Looking at employee contribution to social security contribution by employers and even by employees. So those are incomes earned but not received. So it's just the deduction. So you must have gotten your national income first, right? And look at it. Okay, what are the incomes received but not earned at? What are the incomes earned but not received among this long list of items removed? Whatever you get at the end of the day is your personal income, right? So now there are related concepts. One is personal disposable income, which is actually the income accruing to households in an economy after the deduction of personal income taxes. So don't just say taxes, because there are different type of taxes. So are you talking about corporate profit taxes? Are you talking about taxes on wealth? Are you talking about capital gains tax? Like what tax exactly? So you must be specific enough to mention that it is the deduction, it is personal income left after the deduction of personal income taxes. That's that. Now, the next one that I have is per capita income, which is also known as income per head, it's also known as income per head, per capita income. I think income per capita, I think something like that too, right? So it's actually calculated as your national income divided by your population. So you could have a couple of questions I would ask, okay, calculate national income, calculate personal income, calculate what do you call it now? Calculate income per head or income per capita or national income per capita, whatever grammar, the question is going to give you an inkling of what formula that you are supposed to use, right? So like I think I'm done with summarizing everything that is here. So again, PI, which I am denoting for personal income, at a different stage in life, it may be called private sector income. Private, so that income accruing to the private sector, right? Income accruing to firms and businesses, right? In that aspect, so you're looking at firms. No, what am I saying? Firms and households. But those are the people that constitute the private sector. Firms and households. But like here, we are just keeping things simple. So personal income, just income accruing to households and individuals. So this is the total income received by households and individuals from all income sources over a period of time within and outside the country before the deduction of personal income taxes, as long as it's an income to households. Add, add it. Then you've not yet deducted, by the time you're calculating PI, you are not deducting personal disposable income. You're not deducting personal income taxes. No. So finish, then when you want to calculate disposable income, you now remove personal income taxes. So I'm not going to leave you here like this. We are going to go into an exercise, and then we are going to have an assignment for you to practice with. So, ladies and gentlemen, there is this question for us to play with. So we have these items, and then we will give the population of the country as 1 million people. So the first thing is first calculate the national income. Alright, if you look at this employee compensation, mixed income, rental income, whatever, this is the income approach. And then if you remember that by the time you add up all of the items in the income approach, you'll be getting NDP as factor cost, net domestic product as factor cost. For expenditure approach, you'll be getting GDP and market price. And then for output approach or value added approach, you'll be getting GDP as factor cost. So this one is going to give us NDP as factor cost. So first, let's add up the whole income. So now we are going to be getting NDP as factor cost. So if this was an exam, please, you'll be writing out all of the items that you want to add. But I don't have space, neither do I have the time or the will. So I'm just going to write the things that we are adding. So employee compensation, of course, this guy is in. Mixed income is in. Rental income is in. This one is not yet in because net domestic product, we are not yet adding property income from abroad or to abroad. This is also property income to abroad. I don't want to just keep writing it. So this one is in. Um, Transfer payments, nope. Interest is in. Retained earnings. Since we already have corporate profits, remember when I was teaching you guys this? So you don't need to add retained earnings again. Everything is already included in the corporate profits. Personal taxes, nope. Corporate profit taxes, nope. Social security contributions, nope. All right, so we just have employee compensation. So we're having 4,000. Just remember the values are in thousands of millions, so which is actually billion. All right. So then 4,000 plus mixed income is 650. Again, if it was an exam, right? First, employee compensation plus mixed income plus whatever. Rental income is 150. Then plus we don't need this one yet. Corporate profit is 750. 750. Transfer payment is not needed. Interest is 350. Interest is 350. Retained earnings, no. Personal taxes, no. Corporate profit tax, none of our business. Social security, okay, we're done. So any as factor cost, 4,000. This 4,650. 4,008. 4,008. Then 4,008. That's 5,750 and 6,001. So like 6,001 to me. All right. 650 plus 350. That's 1,000. 1,000 plus 4,000. That's 5,000. 5,000 plus 9. 5,009. How did I get 6,001? Let me do it again. 4,650. 4,008. 5,550. Then 5,009. Okay, so NDP as factor cost is actually 5,009. So 5,900 million. Okay, naira. So for me to get my NNP as factor cost, which is same as my NI equals same as NNP as factor cost, I just have to do my NDP as factor costs plus my net factor income from abroad FIA. So what I'm going to get here is 5,900 plus net factor income from abroad is income received from abroad. So that's why I'm going to do this. Property income from abroad, which is 450 uh, plus 450 minus property income from abroad is 400. 400. So this gives me 5,950 million. So I've gotten my NI. So A is sorted out. For B, I think we've done this before anyway. So for B, we are going to be having personal income. Recall that personal income is going to give us is national income, then plus income received but not earned. So if you look at this, what were the incomes received but not earned? So we don't know all of these items again. We pick this, we pick this. Transfer payments 150. So it was received, it was not earned. All right. I'm not writing the formula again, you already know it. So 5,950 plus transfer payments 150 was received, but it was not earned. Where is it? Income received but not earned. Do you also have any other transfer payment? Any other thing after transfer payments? All right. So minus this minus income earned but not received. Income earned but not received. This gone, gone. So not all of the profits was received. So even though it was earned, so we have to go and look for corporate profit taxes. First, retained earnings. Retained earnings is 150. 150. It was received. It was not received, even though it was earned. Like it was part of the only thing you got was dividend, right? So retained earnings plus corporate profit taxes, then corporate profit minus two of them. Then that will give you your dividend. So the only thing you receive was dividend as household. So I'm going to remove corporate profit taxes. So you have 300 is here. Then plus social security contribution also you earned that, but you did not receive it. All right. So why did I do it this way? Like I could have just done 150 minus. So what I'm trying to do here is just okay. This is representing income received but not earned. Just add everything together, right? When you've added that, you have to subtract income earned but not received from it, right? So like all of your income earned but not received, add all of them together as well, and then subtract the whole thing from whatever you have here. So I think it's an easier way to like get this thing done. So this is going to give me 6,001. This is 6,001. 5,950 plus 50, that's 6,000. 6,001. Then minus. Let me be sure again. We've taken this. Transfer payments. We've taken interest, retained earnings. So we were only left with picking transfer payments, which we've done. Then retained earnings, which we've done. Then corporate profit taxes, which we've done. Social security contribution. One, two, just four items. All right, and one, two, three, and then four. Correct. 150 plus 300, 450, then 550. So this is going to give us 5,750. So now personal income is 5,750 million. I think is it up to no this should be like 5,550, sorry. 5,550 million. Alright. 550 plus 550 is 1,001. Okay, correct. Now C says personal disposable income. Okay, PDI, personal disposable income, which is your PI, the personal income minus 5,550 million minus personal income taxes. This personal income taxes 100, just 100. 150, 100, 300. So just 100. Minus 100 million naira. And this guy gives me 5,000, 5,450 million naira. So that's PDI 555 minus 100. Then the last one says, what's the personal PCI? That's personal per capita income rather. So PCI is per capita income, which is the national income that we got here, 5,950. Just put it in this marker. So you have 5,950 million divided by 1 million people. 1 million people. So million cancels million, 5,950 million naira. Million cancels million, so we are left with 5,950. So which means per head or per person, what was earned that year was 5,950 naira. Million has cancelled a million because population is 1 million people. Yeah, so you can say it is easy. So it's not a difficult thing. Although I already streamlined the items needed for the income approach. Normally there were other things, um, gross capital formation, all of those things that you don't need. But like I said, this night I don't have time, so let's just do what we have to do straight away. So yeah, this is it. If you have questions, leave them in the comment section. If there is anything like a contribution or an appreciation, the comment section is there for you. So what next that we are going to do now is your assignment. So here is the assignment on the board. The population here is 14 million people. 14, 1 and 4, 14 million people. And we have the following items. So the question is just to do like the same thing that we did in the exercise. So we have the following items. Net factor income earned is 80. Child support program 240, capital consumption allowance 540, royalty is 280, social security contribution by employers 400, interest is 260, balance of trade. So it's up to you to like go and find out what balance of trade is. If you don't know that already, balance of trade is 220, proprietor's income is 660, dividend is 320, compensation to employees is 4460, indirect taxes is 360, undistributed profit is 420, personal taxes is 520, corporate income taxes is 380, the next private domestic investment is 660. All right, so they are all in millions of naira. So A, calculate the national income. Your questions are necessarily not going to be like this. So you can just, it's likely going to be in full. Calculate the national income, calculate the personal income, calculate the per capita income, that is C, and D, calculate the personal disposable income. So thank you very much for attending this class. I hope you enjoyed it. If you have any question, ask and all of that. So bye. Yeah, bye.